there are some businesses that, for example, coal. There's no question that divesting from coal as a long-term investor is a good decision. The risk associated with the transition to a low-carbon economy, stranded assets, is so significant that owning coal assets is just a bad risk decision and it's a bad opportunity decision. There's other, for example, heavy crude types of businesses. We think that those are not very interesting businesses. And so the answer to your question is it kind of depends on the carbon intensity of those assets and the cost of finding new hydrocarbon assets. That determines whether and how a business might be stranded. So not all hydrocarbon-based companies will be stranded over the next 5 years, but there's some that we reckon will be, certainly their price will be significantly impaired, and that's the point. It's a bad investment decision to own an asset that you can see very clearly will become less valuable over a long time. And particularly for a pension fund like CalSTRS, you're a long-term investor. You need to be thinking about building these portfolios over decades. And when you see that we're in a clear transition to a different source of energy, holding on to these old hydrocarbon-based, intensive hydrocarbon-based businesses is not a good portfolio decision. It's not a good risk decision. And of course, it means that you're losing an opportunity to take the funds that are currently invested in those sorts of assets, invested in a more positive way to benefit from the transition to a low-carbon economy.